Hello everybody and welcome back to the channel. Today we're going to be taking a look at Google stock and see if it will be a good investment to our portfolio. Now, if you don't know who Google is or what Google does, pretty much is the search engine I'm using right now to show you what you see on the screen. As you can see on the top left, it says Google right here. They are the third largest company in the world, technology company by revenue after Apple, and one of the world's most valuable companies overall. Now, as you can see, year to date, they are down 9.71%, which is about $18. And if we compare the 52-week low with the 52-week high to the current price that we are now, it's sort of around the middle. So this is why I'm looking to invest in this stock. We take a look at the overall 1-year chart of this stock. We can see that it's almost at this low of November 22nd, 2024 of about $166. Guys, Google is a giant in the stock market, so that is dropping like this definitely gives you a sense of opportunity. That's why we're going to take a look at its intrinsic value and also a new formula that I have and show you to see if it will be worth investing in this company. One quick thing to take a look at that I love about Google is that it does pay a dividend. Yes, it's trash compared to what other companies pay, but this is like technology company. It's not a dividend aristocrat, and it's still paying you a 0.46% dividend. As well as if you take a look at the market cap, I mean, they have a lot of moat. They have 2.9 trillion in market cap and their PE ratio is below 25. As we just saw right here, it says by revenue they are the third world's largest country. So let's take a look at a discounted cash flow formula and see what the intrinsic value based on that would be. Taking a look at the discounted cash flow analysis model, we can see we have Google here. I put this from any source in the internet, Google Finance, Yahoo Finance, or wherever you want to look for it, and you can see Google has an average growth rate for the past 10 years of 20.96%, and the growth rate I'm going to be using from the formula is going to be only 10%. Now, the perpetual growth is about the growth rate in the economy. The discount rate is sort of the margin of safety you want to have, I guess you could say. At least that's how I understood it. I'm just trying to get this figured out as well. I just wanted to show you guys. So I pulled this number from Yahoo Finance as well. And just based on cash and its cash flow, this stock should be worth around $412. Does this mean you should buy it right now? No, not really. We have to take a look at other metrics. So let's get ahead and take a look into that. Before taking a look at the intrinsic value, we got to find what the future growth for Google is going to be. As we just saw in the discounted formula, it was around 20% on average for the past 10 years, but analysts are expecting in the future 10 years to be increasing by about 11.2%. So I have this metric here that I'm going to be leaving a link on probably one of my future videos very soon here. We got to type in the stock ticker, which is going to be Google, and then we got to type in the growth rate projection, which is 11.2. And as you can see, guys, according to the stock's intrinsic value, the original Graham formula and the updated one, this stock should be worth above $200, around 230, 220 bucks. With the analyst revised formula, which I barely use, it's a little bit too conservative. It should be worth about $124. Now, if we want to do like an average on these three prices, so if we add everything up and we divide it by 3, the stock should be worth around $491, which is close to around the $430 on the discounted cash flow analysis. But that's not how you invest in an intrinsic value. As you can see, again, the current stock price is 170. And you have this margin here, but I like to invest with at least a 35% margin of safety, which is this down here. And if you apply that, which means you have to buy the stock 35% lower than this, you should be buying it around $137. However, looking at the chart, I really don't think Google is going to go back down to $137. Maybe it goes to around the 150 area, which is where I plan to buy it, because this is the last time I sold this stock. Yes, I was one of those people that I had it for like 140 bucks. It went all the way to here, and then when it went to 150, I sold it. I thought it was just going to keep going down, and I made that mistake of not holding for the long term. So now that you saw the intrinsic value of Google being around $137, $150, you saw also the discounted cash flow analysis. It gave us a value of around $412. How do you pick on where to choose from and what's going to be right? Well, the honest and the truthful answer to that is you really won't know. That's why this kind of formula exists. So you could sort of calculate what will happen to the stock in the future, but there's always other metrics and measures that you got to take into account. For example, if there's like a war, or if there's like another, I don't want to say the word because it'll get my video banned and not get views, but you know what happened a couple years ago that nobody could get out of the houses. Something like that could also affect this. But if I could give you any advice, is when stocks like this that are worth about $2 trillion, PE ratio is very low for a technology company, and it does pay you a dividend yield, and they are down year today about 10%. You might want to look into investing it into the stock. I'm not a financial advisor, but this is definitely a company I'm taking a look at. If you enjoyed the video, guys, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.